breaking down the deals, data, and disruption shaping global markets. You're listening to The Daily Ledger with Dennis Sert.
Ladies and gentlemen, it is Wednesday, December 31st, 2025. You're listening to The Daily Ledger Show, and I am your host, Dennis Sert. Great to be here with you today on this New Year's Eve. Happy New Year's. How exciting, 2026. Hopefully it's filled with success and love on your end as well as mine, on all of our ends. So you know what? Why don't we kind of talk about what we have today? And I also want to go into the macroeconomic trends. So why don't we do that right now? The Dow Jones is down 0.28%. The Nasdaq is down 0.15%. S&P 500 is down 0.24%. And Bitcoin is, in fact, looks like down 0.24% to 87,919. We're going to talk about a few things today. We're going to talk about the Fed meeting notes that came out. So as we know, the FOMC or the Fed or the Federal Chair lowered rates 0.25% in the last meeting, which is good for kind of like jump starting the economy. Bad for inflation, but inflation seems to be down ish. So yeah, we need the economic boost. So that's why it's good. So we're going to kind of go over some of my notes on the FOMC meeting notes. We're going to talk about a story from the FT. AI forecasts to put 200,000 European banking jobs at risk in 2030. We're going to talk about Mark Zuckerberg apparently hand-delivered soup to an OpenAI employee he wanted to recruit. And then we're going to kind of talk about this new startup that's stopping data leaks or water leaks in data centers. But before we do that, make sure to download Byte AI Market Analysis, which is a financial copilot that tells you when to enter and exit the market. It does that based off of technical indicators like the RSI curve, Bollinger Bands, MACD curve, as well as the news sentiment. So you can download this on the App Store at Byte AI Market Analysis. And hope to see you there. I use it every day. Make sure to remember that it's not a financial advisor, neither am I, and past success does not guarantee future results. But that being said, let's get started. Okay, so I have the Fed meeting notes here for December 9th and 10th. And the first thing I wanted to start with is actually how the voting went. The voting went all... I think it's 13 members, 12 or 13, whatever, right? Almost all of the members voted to cut, and then 3 members voted to not cut. But this was interesting because similar to last month's FOMC meeting, where they cut as well. So this is from last month, like the month prior. So November. So this guy, Stephen Miran, who I called it last time we talked about the notes from the month prior. He's kind of being tongue in cheek. He's kind of being cute. He's voting against it because he wants more of a cut. Okay. So whatever that's worth. Like, it was funny the first time, but now he should really be voting for, but like whatever. So he says, so this is from November. He preferred to lower the target range for the federal funds rate by a half a percentage point, or October. October 29th. That's what I meant. And so, yeah, but he preferred to cut it by a half percentage point. And then this Jeffrey R. Schmid guy preferred no change. So out of the 12, I guess it was only really one person, Jeffrey R. Schmid, who voted really to do no change, right? And then now, when you compare it here, it's the same exact distribution, except this new guy named Austin D. Goolsbee joined Jeffrey R. Schmid, who preferred no change. So basically, the no change count went from 1 in October to 2 in December, right? Because this Stephen Miron guy is really voting for it. So that's what we see. Now, what are people talking about like online as it comes to this? Well, people are saying that apparently they're not gonna cut rates. And I'm actually gonna hold off my personal opinion on this for a little bit. I want to see kind of like where the wind blows on this. I think we're gonna get into where I may be leaning, but um, let's just see what everyone's talking about on X. So they're saying no urgency to cut, no justification to accelerate rate cuts. A prolonged pause is confirmed. And I guess Jerome Powell somewhere probably at some conference or something, he said rate cuts may be done for now. This guy says no rate cut is best for January 2026. I guess like Polymarket and like the prediction markets are pricing in a no rate cut for the January 28th meeting. Let's see here. Showing sharp divisions among policymakers on the 2026 rate cuts. Yeah, so a lot of people are saying that they're not going to cut rates. In fact, I guess like if you go by some of the prediction markets here, 83.9% of people say that it's not going to be lowered and only 16% say it will be lowered, right? I mean, we saw a distribution that was similar to that at some like during certain parts of the last couple months, and yet they still cut rates. But I think what's also important, because at this point it's like, a really strong signal for me that they will or won't cut rates is how many people actually voted to do so. Right. And it's like, okay, there was a -1 change. Like there's only a +1 voting against this action, right? Since last time. So it went from 1 to 2. Because if it really becomes a tiebreaker, you're going to expect this guy who preferred lowering the rate more to vote for. Like he'll probably jump ship. Like he's not going to change his mind if he's so bullish on cutting the rates by more than what everybody else is. Like he's not going to suddenly change his mind and be like, "Oh, actually we shouldn't cut rates." He's probably just going to jump over here if, it requires him to. The fact that he voted against the action so comfortably kind of shows like what's really happening. But you know what? Let's do a little bit of a deeper dive into what exactly they said. And I have some places that I took notes of. Let me see if I can copy paste this into here. There we go. So it says here, so just quick overview. They mostly talked about the weak labor market in this FOMC meeting, and a lot of them didn't like it. What was kind of funny with this like little segment though is that it said that a few, like, I'm only showing this to show how delusional some of these people are. A few participants judged that lowering the federal fund rate target range at this meeting was not justified because data received over the intermittent period did not suggest any significant further weakening in the labor market. Yeah, so some people are like, yeah, well, maybe we shouldn't lower the rate cut. Maybe we should just keep it where it is because the labor market is doing so well. Is the labor market doing so well? Is it? Yeah, so it just goes to show how delusional it is. Like, it's funny because it's like it's like two camps, right? It's the camp of lowering it. They seem to be understanding the fact that the labor market is doing really badly right now, and unemployment is like kind of rising. And they kind of talked about that too in the meeting notes. And then the other camp is like, oh, there's no bad labor market. What are you talking about? Let's just keep it how it is. Right? So that's what that sentence shows us. But yeah, okay. But despite that, though, there was this other thing I wanted to talk about. which I'm collecting right now. So then apparently there was, a range of views that were kind of shown at this meeting. Okay, so it says here, most, and be like, pay attention to the wording, right? Because here it says most, and then later it says some. Most participants judge that further downward adjustments to the target rate for federal funds rate would likely be appropriate if inflation declined over time as expected. Okay, so if basically President Trump doesn't print a whole bunch of money just out of nowhere, they're probably going to continue to cut rates. Most people are saying that. Okay. With respect to the extent and timing of additional adjustments to the target range for the federal funds rate, some participants suggested that under the economic outlook, it would likely be appropriate to keep the target range unchanged for some time after a lowering of the range at this meeting. So, again, like, the ideas are polar opposite. Some are saying, yeah, we're going to continue to cut rates. And then here it says, oh, well, we're probably not. Again, it's a voting thing, right? 12 people have to vote. And so far, voting has been overwhelmingly for cutting, with at the last meeting, as in 2 meetings ago, as in October 29th, effectively one person voted no change and not for the rate cut. And then in this past December meeting, December 9th meeting, it was 2 people who voted no change effectively, right? So you have to pay attention to that. And then you have to pay attention to the wording where it says most participants say we need to continue to cut rates. And then I guess here it says some participants suggest that we shouldn't. And then I guess a few suggest that we really shouldn't, is what this is going into. Yeah, so there's that. And then here's the last thing that I wanted to talk about here. Okay, so here they're basically saying, here, I'll read what they actually say, and then I'll say what they're basically saying. By contrast, several participants pointed to the risk of higher inflation becoming entrenched and suggested that lowering the policy rate further in the context of elevated ratings could be misinterpreted as implying diminished policymaker commitment to the 2% inflation objective. So this is basically saying it'll look bad if we continue to lower rates back to back. So that's kind of what some people are saying. But luckily, it's just several participants. And not every participant is a voting member. It's only 12 of like the 30, I think, people who are present, who are able to vote. So, yeah. Just based on that review, I'm kind of leaning towards that they'll cut rates again. But that's with a caveat that the inflation continues to go down and not up. Because that's essentially what they caveated on too. And it's like, I feel like you cannot beat, like, in terms of analyzing this, like, you can't really beat like the voting results. Like, you can honestly just skip everything that was said if you wanted to, and you could just look at who voted, right? Because if it was like, it's a landslide. It is literally a landslide. Like, I'm not even being hyperbolic, right? I mean, 10 out of 12, we're not counting this guy, remember. 10 out of 12 of the guys, so these only 2 people said we don't want to cut rates. Like, that does like, if it was close, if it was like, oh, like, I don't know, 6 people say this and like 7 people say that, or whatever, maybe it's 13, right? Whatever, right? If it was a 50-50 split-ish, then I would be like, okay, well, you know what? They're probably not going to cut rates. But I mean, it's a landslide, right? So, like, the only explanation for them not cutting rates, and this is why I'm not definitively saying this, because who knows? Like the political atmosphere may change very quickly. The only reason I'm not definitively saying, yeah, they're definitely going to cut in January is because these people could all just be voting in unison just cuz. Like it could be that Jerome says like, okay, this is what we're going to do. And then, all of these people suddenly fall into lockstep, which, based on what I'm reading on X and stuff, and people are like, oh, they may not. Like either all of these people are just really dumb and they don't read the notes, or they don't like understand that at the end of the day, it like the voting is what matters, or these people are all just falling into lockstep with Jerome Powell. And if Jerome Powell suddenly says, like, if Jerome Powell said, okay, I'm voting against this action of cutting and I want to keep it at no change, then are all of these people also going to join him? Because then this hypothesis would be kind of cooked. So that's why I wanted to go kind of deeper into the notes this time. I know last time I was right last time. Last time I said that, hey, based on, right? So these were the notes from last time. I said, based on voting for and voting against, just on those numbers alone, they're definitely like, it's literally impossible for them to not vote for it. And I was right. And they voted to cut. But this time I'm being a little bit more cautious because, yeah, voting is the number one indicator, but I don't know. I'll have to see. What I'll have to see is at least one cycle where they vote against it. And I want to see how the voting ends up for that. And then that way I'll be able to tell, okay, who's just following Jerome Powell? Was it Jerome Powell who voted against it? Like, I'm starting to think that if it's just whatever Jerome Powell chooses, that's what's going to win. So anyways, you know what? Let's just move on. AI forecast to put 200,000 European banking jobs at risk by 2030. Morgan Stanley analysts predict roles in back and middle offices will bear brunt. Cuts are most likely to come from within banks' central services divisions, which include back and middle office roles, as well as risk management and compliance positions, according to the analysis of 35 lenders. I mean, honestly, like just, tender your resignation, please. Like it'll be easier for you. It'll be easier for me. It'll be easier for everybody. Like how nice will that be if every single one of these European bank back and middle office position people just submitted their resignation? I mean, it'll be okay. Like, you know what? I learned this new, like there's this Chinese proverb that goes like this: "Qiao qiong bu sha," which roughly translates to "lay down your weapons and I won't kill you." And this is metaphysically, lovingly, and non-violently, right? It's a Chinese proverb. But the analogy fits here because it's like give up your jobs now and then, just be more at ease, right? Just give up. Just it's over. Like AI is coming for your jobs. And Bernie Sanders won't stop it, right? Bernie Sanders won't save you. He's not going to implement the moratorium on data centers. There will be more and more data centers, right? And with Operation Stargate, of course, with the $500 billion in data center infrastructure, right? So you can bet your bottom Benjamin that there will be more data centers and there will be acceleration of AI performance, and the labor market will get worse, and then your job will be taken from you. And this isn't a bad thing; it's a good thing. Just accept it, right? So that's what I have to say to these European bankers, right? It's okay. Just give up. It's over. The dumbest things that happened in tech this year. I wanted to talk about how I guess Mark Zuckerberg hand delivered soup to an OpenAI employee he wanted to recruit. And it's just kind of funny because, because obviously Meta is trying to, poach all these like AI researchers. And where's my soup, bro? Where's my soup? Like, I want my soup. You know what I'm saying? Like, yo, like, listen, like, I haven't applied for any of these jobs, but you know what? I could research the crap out of this AI. You know what I'm saying? Like, literally, I can do anything. And it's literally like anybody can do anything with the right mindset in 2026 now, right? Starting tomorrow. Because with all of these crazy models with GPT 5.2, Gemini 3, Grok 420, right? Like, there is no such thing as understanding corporate culture, as experience, as priors, right? Nobody cares. Can you write the prompt, bitch? Can you write the prompt? Like, that is all I need you to do. You know what I'm saying? It's like, oh, well, you don't have 5 years of experience. Who gives a shit, bro? Like, what? Like, some leak code coding I did in 2017 isn't gonna, improve your MRR, right? You know what I'm saying? It's the knowledge of LLMs. It's like that guy from Ted Lopez. It's like he said, knowledge. Mayan Flow wants to stop data center leaks before they happen. You'll have Bernie Sanders in here just like pouring water on these data centers, like, yes. So I guess this story is basically about this founder. So I guess he mentioned that he had to conserve water as a kid. His dad would say, "Hey, are you in the shower? You're in there too long. Are you singing in there?" What is he singing? And yeah, so he kind of talked about how he later became an engineer, and then he kind of put together his frugality of water and engineering. And now he's like basically stopping water accidents in data centers, which are really bad for data centers. And apparently he boasts a 24 to 48 hour advanced warning for that. So yeah, that's kind of cool. Data center water damage prevention. How about that as a startup? Alrighty, folks. I think that's good. We did a lot today. We even learned some Chinese. Make sure you download Byte AI Market Analysis on the App Store to trade in a more informed manner. And I hope you guys have a lovely New Year. Happy New Year, and we'll see you in 2026. Peace.